Well, good morning, good afternoon. It's Sean Woodess from the Verico head office here. Hope you're all doing well. It's a Friday morning for you on the East Coast, Friday afternoon, so you're closer to the weekend than we are, so congratulations. And we're amazingly almost halfway through the year, and I know from traveling the country the last few months here that it's been a great start for many of you across Canada, and June seems to be on pace for another record month for many of you. So hopefully everyone's having success while still having kids coming to the end of school year, and summer's about to start, so it's that juggle time of the year. We're very happy today. As you know, over the many years and many discussions with many of you on this call, a lot of people have asked for this type of product, and we've searched high and low and talked to many companies, and it was a very easy decision to work with this company today. They're going to give you we're going to be a pretty short call today. We're going to get you in, we're going to get you out so you can continue to do business. But I think you're going to find today you're going to have a real value for your business that's going to not only reward you financially for the transactions you do with them, but more importantly, can really help elevate your mortgage business as well. So in conjunction today, you're going to have a great opportunity. So I'm going to let you not listen to me anymore and pass it to the important people today. So I'm sitting here with the CEO, Kevin Sandu of Grouplend, and Sean O'Connor, head of corporate partnerships. So without further ado, I'm going to hand it over to them.
Thank you, Sean, and thanks for the big list of people that dialed in today. Like Sean said, we recognize it's Friday, and in fact, Friday afternoon for a lot of other people, so we'll try to keep this short and sweet. We have a few slides to give some information. Feel free to jump in with any questions. We love questions, and hopefully we can address some big concerns. But we're excited to tell you about the product that we have and how we can help you build yet another tool in your war chest to win clients and grow your business. So just a quick overview of the two of us sitting here today. Sean mentioned Kevin Sandu. I founded the company, continue to manage it today. The company goes back a couple years now. We put it together in late 2013, spent the better part of about a year and a half building the business in a couple different fashions. One was as a financial services provider. There's obviously a lot of sticky work around regulations and getting the business up and running. And secondly, and this is really core to what makes us unique, is we early on brought on a team of just fantastic software engineers and credit specialists and built a very sophisticated and complex set of software and algorithms to really do something meaningfully different in the financial services space rather than simply take tried and true old-fashioned bank products and put them in an online channel. We really started with a blank sheet of paper, and as a result, we think we're doing something much more meaningful in the marketplace. I'm joined here with Sean O'Connor. He's the head of our partnerships group, so he will be probably really the main point man for the audience here on the phone, and always around and happy to help. So why don't we jump in a little bit? So what is Grouplend? We are an unsecured, we offer personal loans online. They are unsecured loans, so our borrowers can take the loans out for any purpose they wish, don't need to provide any particular security, and as a result, they're incredibly fast, incredibly flexible, and what's quite unique to us is very competitively priced. So today we offer up to 3-year loans. Over time, we'll probably continue to expand that offering, but we've found the majority of our borrowers are really looking for that couple or 3 years to tap anywhere from $1,000 to maybe $30,000, very attractive interest rate. They can prepay that loan at any point. There are no penalties. They can do it all easily online, really self-service focused. And so what's unique about us and the way we go out and offer our product much more competitively than others in the market is we take a very technology and data-driven approach to lending rather than what are often very simple and rudimentary methods that traditional lenders would engage in, looking at beacon scores and maybe a few other metrics on a credit report, looking at some high-level rules of thumb around income metrics. Our software, very much behind the scenes, is actually aggregating hundreds and in many cases thousands of data points about our particular applicants. As a result, we're able to get a much richer, more detailed picture of the individuals we face. As a result, we're able to offer much more competitive rates for really what we would consider prime quality Canadians. So we're not a subprime-focused product. We're not the shop that you go to because you couldn't get a credit card or the bank refused you for a personal loan or an unsecured loan. Rather, you come to us because, one, you could get a product from the bank or you could carry credit card debt, but you don't want to because it's too expensive. So great, you come to us to save some money. Two, you're a busy person and you don't necessarily have time in your busy life to carve out your lunch hour or an hour during your day to go to a bank branch and stand in a line and deal with loan officers, provide a bunch of paper, wait days or weeks, and in some cases even stretching out to months to get a response, and ultimately it's not always the response you want. Instead, you come to us, you spend 90 seconds to fill in an application, you get an instant answer right off the bat. You want to move forward with the loan? Great. You spend a few minutes to upload some supporting documentation. And the unique piece about that is being unsecured lenders, it's really a short list of things that the borrower has to provide at that point. They do it all self-service online. They can do it through your phone, you can do it through your tablet, you can do it on your desktop computer. A few minutes later, you're off to the races. You've got all the money you need at a very attractive rate in your pocket. That's what really makes this different. The other aspect that I'm probably focusing a little less on so far is part of how we're able to offer very competitive rates, do this all online, and be very, very nimble is rather than a traditional model at a bank where we would take in deposits, borrow in the wholesale market, put a bunch of money on a balance sheet, often nascent capital, very, very inefficient, turn around and try to lend that to borrowers on the other side, hopefully making a spread in between. We've used technology to really cut out that inefficient middleman. We've got investors, large investors, deep-pocketed investors that come in and directly fund the loans that we're offering to our borrowers, cutting out a huge chunk of fat in between and then passing those savings on. Our investors are happy because they've got an ability to earn a good return on their money, but more importantly, our borrowers are really happy because they're saving money. So as I've described that model of what's often called peer-to-peer lending or marketplace lending, because there's a marketplace of borrowers and investors on the other side, it's a very novel idea here in Canada. We were the first to launch this business model last year. More recently, we've seen a couple other entrants filling in some niches in business lending or really mostly small business lending or the like. But it's still a really young industry, nascent space in Canada. But this is a wildly successful model in many other parts of the country, particularly the U.S. and the U.K. We've listed a couple of names here, companies like Lending Club and Prosper. Lending Club recently went public, now trades on the New York Stock Exchange with a market cap right now that's nearing, I think, about $7 billion. So this might sound like a little bit of a wild and crazy idea sometimes when we sit people down and talk about the ambitious goals we have to compete against what are the largest institutions in Canada. But it's been done successfully, and we're confident that with good partners in hand, like a lot of the folks that are on the phone today right now, we can be successful in that space. So one of the challenges traditionally of why we haven't had this sort of model, really, I would argue many innovative models in Canada has been we've got a very strict regulatory environment in Canada, probably stricter than many other countries, including Canada, the UK, and the US. Second is we've also got really a big five-bank oligopoly that quite often stifles innovation. So it's been challenging for upstarts to really bring real value to the market. We're hoping to change that with what we're offering. So I'm going to kick it over to Sean. He's going to walk through a little bit more about what the product is, how we can work with customers and everyone on the phone.
Thanks, Kevin. So I'm the head of partnerships, and I'll be your point of contact in setting you all up and helping with any questions you guys have moving forward. Most importantly, though, how can we help your customers? Right now, our customers are the same people that you're talking to every day that are your customers. Our minimum requirements are a 690 credit score and an annual employment income of $30,000. We find our average borrowers are between 25 to 55 years old, making $50,000 to $90,000 a year, and about 52% of our borrowers right now are existing homeowners. The other 48% are renting. So there's both a market that you are of your current clients who you've helped get a mortgage, as well as your prospect list who is quickly getting towards the point of being millennials who are able to afford.
And so just a point on that. So round it off, let's say it's half. Half are existing homeowners that obviously have a mortgage and will continue to renew that mortgage for an extended period of time given their age. But the other half are not mortgage or not homeowners yet. The average age of the folks who do not have a mortgage tend to be about 31 years old. The average income of those individuals is about high $70,000 individual income. These are really interesting people because a 31-year-old making $70-some-odd thousand and typically six-figure household income, vast majority of whom live in dense urban centers and are almost exclusively post-secondary educated. I could go on and on about the details because part of our data analytics, we get to almost eerie amounts of personal information around, or analytics around who this profile is. But there's an obvious elephant in the room here. We're offering unsecured loans. They're very competitive, and obviously our customers are happy. But those are people who can and will shortly be engaging in home ownership and taking out mortgages. And so that's a little bit the impetus to why we think this is a huge overlap, in fact, maybe 100% overlap in our target customer and who are and will be your customers over time.
As you guys know right now, as people who are constantly interacting with the population about general debt circumstances, 45% of Canadians carrying a balance on their credit cards is not a huge surprise to you. And naturally, it's turned into about half of our borrowers are using Grouplend to consolidate credit card debt. The other half is to make a major purchase.
So we'll walk through a couple of quick case studies just to really put the meat on the bones of people. We've scrubbed the names, but these are real examples of people we've serviced over the last year or so. So the first is Sandra F. She's sitting on 2 different credit cards, each of which charging her basically 20%. Between the two, she's got nearly $15,000 worth of debt. She decided to come in, spend the 90 seconds, get a quote from us, found out she was going to be paying 12% on a loan with us, invested a few more minutes to upload some documents, take a picture of her license, provide some banking information, and all of a sudden she's now saving nearly $3,500 on this unsecured loan product. And the beauty of it is, it's effectively an open term product. She comes into some money 6 months later, gets a bonus at work, decides to pay it off. Great, she can do that, and she's still saved a bundle of money and hasn't really invested any material time. The other example is so about half of our users are doing things along those lines, refinancing more expensive debt. The other half is a real mixed bag, but we're finding right now a lot of folks, and probably largely to do with the time of year, spring and coming into summer, people are taking out our loans for small home renovations, upgrading appliances. First-time home buyers that we deal with today quite often are putting bare minimum down, 5% down. The minimum amount of equity, can't borrow against their home yet because they haven't built up that equity, but they need, say, $10,000 to cover some moving costs, $15,000 for some new furniture, and they'll turn to us for that sort of a product. And so here's an example of John M. He owns a home, doesn't have a huge amount of equity in it, can't yet qualify for a HELOC, can't borrow against his house yet, but he wants to finish his basement, do some upgrades, came in, borrowed $20,000, excellent credit score, in spite of the fact he's not yet able to borrow against his house. He has a fantastic credit profile. We gave him a rate at just over 6%, well below. I believe in his case, he had an unsecured line from one of the big 5 banks that was about 12.5%. So we're talking about literally half the interest rate, and he was able to get this loan in minutes rather than weeks.
So I'll try and get through these slides pretty quickly so we can get to the questions period. But more importantly, how can we help you guys? There's 2 really ways we can interact with each other. One is to use our product to continually engage with your current clients, earning an additional revenue stream and strengthening that relationship while you wait for the 3 or 5 year period for renewal. The other way is to go out to your prospect network who have not yet purchased a house, who are not yet come up for renewal, and find a way to engage them with different offerings. As you guys know, I'm on a whole bunch of many of your actual newsletters. You're constantly trying to find material to interact with your clients and prospects, and I think that every so often throwing us in there is a great way because, as you know, there's a huge portion of the Canadian population that is carrying debt. So we came and started the discussion with Verico because we were aware that, one, you guys are growing. It's a huge industry that 45% of first-time mortgage borrowers are now going to mortgage brokers. And then as it comes to renewal, a significant portion of that, almost half, drops off over that time as they strengthen their relationship with the lender, often because they go in there for peripheral problems, i.e. maybe they have credit card debt. Now we have something where we are allowing you to have a product that leaps ahead of the big 5 banks, having something that's much stronger, much more efficient, and much cheaper to help you strengthen that relationship, as it's really an offering that is being provided by Verico. So we're thinking that this is a great opportunity to turn one-time customers into lifetime customers, and more importantly, help that strengthen or utilize that large network that you guys have been working on. And quite frankly, mortgage brokers, more so than anyone else, have probably the most vast and impressive and robust networks in Canada because of the nature of what you guys do. You're very publicly facing figures, and it's something where you can use us as another tool to interact with them. So the value proposition here, the $250 we give per funded borrower that you bring in, that's a small token of appreciation for what you guys are doing and helping us. We do think the true value is really strengthening that relationship, building towards and helping boost your mortgage book of business. But a simple email blast here and there or a social media post that brings in 3 or 4 borrowers is a nice way to earn an additional income.
And this is probably, not to get mired into the details, but this is probably a good time to describe at a high level what that really means. In our case, as unsecured lenders, there's a much more limited amount of information that we need, documentation we need from borrowers than, say, taking out a mortgage. And the other part is the way we've designed our systems, they really are largely self-serve. As Sean said, this is literally going out to an email blast and telling them, hey, here's a link you can click on to find out if you're going to save a whole bunch of money. And your required involvement, at a minimum, is done there. If you want to continue to talk to the customer, which we think is a great idea, build that relationship, fantastic. But it's really as much as just sending them off to a place. We tag that. We know who sent off to us. We get a loan closed, and magically once a month you've got thousands of dollars coming in commissions.
So quick overview of the process. For those of you who'd like to sign up, we'll sign you up. You'll have your own tracking link, which is glnd.ca/first name, last name. Sends the borrower over to the Verico Grouplend co-branded application page. They fill it out, takes a minute, does not impact their credit score, so it's a great way for them to compare the rate we provide with any other relationship they have. And if they qualify, they get an instant personalized quote. If they choose to move forward, they upload a few documents. Once they've come to that Verico Grouplend application page, your work is done. At that point, you don't need to stick handle any documentation. You don't have to worry about any logistics or anything like that. Bringing them through the Verico Grouplend page is enough to get them through. So a quick look at just what the application page looks like. It takes 1 minute, does not impact their credit score. As soon as they get that instant personalized quote, a slider pops up, gives them their quote for the amount they've asked with the interest rate. They can slide it around to different amounts, which will show them different corresponding interest rates as well to optimize the most efficient loan for them or makes most sense for them. Like I said, we're here to make your life easy. We're going to stick handle all of that, the documentation process. It's all automated online. It's a very quick and slick process. So for those of you who are in Vancouver, if you guys are ever in Vancouver, you can come see my ugly mug at our office. And like any good tech company, we've got an office dog walking around. But if you're not in Vancouver, feel free to give me a call at the number listed there or send me an email. But we'll try and get to this long list of questions here for those of you who are still around.
Well, thank you very much, gentlemen, and while you guys can go through a whole list of questions that are coming in, that's fabulous. I really want to highlight a few points because I think they're imperative. I mean, you guys have a few really cool opportunities to make money. Some of you have huge databases. Just an email blast or social media post could make you $1,000 a month. That's a nice $12,000 holiday at the end of the year. I'd like that. So, but as well as think about all the scenarios. You guys probably know a lot more than I do, but think about that TDS that is a little off that's getting you to qualify for that customer's mortgage. Consolidate a few of those, change the TDS ratio, get that mortgage done. So there's lots of opportunities to put some fences around your customers. So there's a few questions here. Do you guys want to grab a couple of those?
Yeah. So there's a few seem to be sort of on the same topic. We'll try to prioritize those. There's some questions around where are we active, what areas do we cover. We're generally nationwide, a couple exceptions. We are currently, for the time being, non-servicing borrowers in Quebec, Saskatchewan, and Nova Scotia. All three of those we expect to be able to cover in the coming months or so. Quebec's probably the one that's the latest out of those three. But aside from that, the rest of Canada, including the territories, if you happen to have some people buying an igloo up north and looking for a personal loan, we do cover the rest of the country. We have a couple people asking about fees for application. There are literally no fees. A lot of people talk about no hidden fees. We actually have no fees, full stop. No application fee, no underwriting fee, no prepayment fee. There's an interest rate if you choose to take out that loan, and that's it. And you pay the loan out early, you only pay the interest to that time. We're not going to continue to, if you took out a 3-year loan, you paid it halfway through, you're not going to have to pay the rest of it. You're just going to pay the interest to that point. Some questions about what Sean talked about here about not affecting the credit score and our minimum score requirements. To be clear, we do look at credit scores. That's one of the large mosaic of information we look at. But our proprietary systems, after painstaking months of working with bureaus as well as a number of other data source providers, because we have this complex set of algorithms that look at literally hundreds of data points to come to a conclusion about our borrowers, the credit score is just one piece of many, and so we're actually able to not affect their credit score in spite of the fact that we are pulling not only their score, but frankly, we're pulling the full raw bureau, much more than just their score. Now, to be clear, if they ultimately take out a loan, it is at that point, it will be recorded as a hard inquiry. It may affect their credit score, but to come in to apply, just check out what your rate might be, just to find out if you qualify and what you qualify for, to kick the tires effectively, it won't affect your credit score in spite of the systems on our back end where we are looking at beacon scores and many other factors. A lot of people asking about the use of proceeds. Now, that's the beauty of unsecured lending in the product that we're offering. Anything. You can take out the loan to buy a car, pay off debt, any other use. A lot of people are asking about, I guess two things here. Some people are asking about paying back taxes, paying Revenue Canada. Now, there's no reason why you can't take our loans to do that. The caution I would add there is we are focused on minimum 690 FICO scores or credit scores or beacon scores, whatever you want to call it, prime quality borrowers. Just be cognizant of the fact that somebody coming out to take out money to pay off back taxes or deal with consumer proposals may not be at that prime space. Now, again, you have any doubts, invest the 60 seconds to fill in the application. We'll find out very quickly. But just to give that heads up that while we are not fussed about what the use of proceeds is, some of those folks may not qualify if they're in a particularly distressed scenario. A lot of people asking, and this is probably because we're talking to mortgage brokers and agents, about down payment money. Now, again, our loans are unsecured. People can take out the loans to take out and put down as a down payment. You'd want to be cognizant around debt levels. Taking out a loan from us, that's going to increase their TDSR and GDSR and then turn around and qualify for a mortgage on top of that. But in principle, absolutely no reason why you can't take out the money for a down payment. I would caution, however, that our product isn't designed really to be sort of 2 or 4 week bridge loans that somebody's buying a home, has not yet settled on settling their old home and needs a couple of weeks to cover, say, $20,000, $30,000. That's not really the ideal use. That's not the real value add. There are probably other ways to get some bridge money. It might even be as simple as borrowing from friends and family. So it's not something that certainly the loan could be used for that, but probably not going to get a lot of value out of that sort of a use.
One of the key questions you guys probably all have on the call is, because you're still on, there's lots of you and you're asking questions, is how do I actually get access to this? So what you're going to see, if you're an agent on this call or you're a licensee on this call, licensees that are on this call, so the owners of your brokerage for you agents out there, post this call today. You are going to get an email from a brokerage level to have everyone on your team sign up. All the agents in Canada on your team can sign up. One form, you the broker, complete it, list all your agents, and then what's going to happen is Grouplend is going to kick grouplend.ca/first last name for you. So they've got banner ads, they've got links, you can do whatever you want to direct it, and it'll automatically know that you're the one that's owed money. Agents that are on the call then, you're not going to get the application to sign up, so go talk to your broker owner this afternoon. Say, hey, did you get that? Can we sign up? Can we sign up today? Can we have it done by Monday? These guys are keen. They're going to work hard with you to get you signed up pretty quickly.
So some of the questions, again, around the sort of the structure of the loan itself. We're offering up to 3-year loans today. Given some feedback, we're happy to explore longer amortizations, but today's a 3-year loan, fully amortized, monthly amortizing, so you've got fixed interest rate. Obviously, that's a topical point these days, that fixed versus variable. In our case, we take that interest rate risk back to ourselves and the lender, so fixed interest rate, fixed monthly payment, fully amortizing over a 3-year loan. Some questions around what goes to determining our interest rates. Again, that's part of the secret sauce of what we do very differently than others. We look at that wide breadth of information. To be clear, we do look at things that would go into a traditional decisioning. We look at the credit score. We look at the broader aspects around a credit bureau. We do look at affordability considerations around income and the like. We look at broad financial transactional data to really get that richer picture of people. But one of the pieces is we are pulling bureaus from Equifax and TransUnion, and importantly, we are reporting back to those bureaus as well. So this is a responsible product to continue to build a borrower's credit score as well. Some questions around the documentation and what a borrower needs to provide. We do ask for some copies of ID. Again, this is all done online. You snap a picture of your ID. We knock off regulatory requirements as well as confirm communication and future communication. We require proof of income, and we require some banking information. Now, all this is done on a very low-friction method. Proof of income, you take a picture or email us the last couple pay stubs. If you can't provide pay stubs, we will take notice of assessments from the last couple years. The banking statements is actually a particularly unique aspect. Rather than sort of printing off and scanning or faxing bank statements off to the Netherlands or to a random recipient on the other end, we built within the online process sort of a completely secure method of effectively what you do is you log into your online banking, and you really are logging into your own online banking. You bank with TD or RBC or whoever else. You log in RBC or TD. We never see your login credentials. We don't know your username. We don't know your password. We don't store any of that. But what happens is once you log into that, our APIs are built cooperatively with the banks where they effectively scrape out a bunch of information that we need. So we know the name, we see bank account number, and quite often we can actually take proof of employment that way as well. So really it's one step and we knock off a bunch of stuff. After that, we send off a loan agreement that's signed digitally. Again, you can do it on your smartphone, you can do it on a tablet or your computer. You sign that digitally, automatically gets sent back to us, and the money's on its way. A couple of questions around the loan amount. We offer up to $30,000 today. There's a minimum of $1,000 simply just to make the transaction worthwhile, but anything in between is just fine. Term loans versus line of credit. So today, again, we take feedback. If there's a particular demand, we can develop really any product. Today, it's a term loan. We are not offering revolving lines of credit, and the rationale is, in our case, it's quite challenging to offer fixed interest rates on revolving lines of credit. We feel like we've kind of created the best of both worlds. You come in, you get the loan, you want to pay it off, you can pay it off, you want to come get another loan, you spend 90 seconds and you've got another loan in your hand. So it's effectively that revolving line of credit when you need it, but the benefit of it is lower interest rates than a line of credit unsecured line of credit will often offer, and more importantly, these are fixed interest rates. So it's almost a hybrid of the two that we think takes the best of the two. Some questions around Saskatchewan. So we'll keep in touch. We're optimistic that in the next couple of months we will be able to offer Saskatchewan, and certainly as trusted partners and the like, we'll let you know as soon as we're up and running in that space. I think we've covered the bulk of questions.
Yeah, there's definitely going to have some detailed questions, and these guys Sean's going to be made available for you. Again, the key thing here, folks, is sign up. Get your brokers signed up. Get all broker owners on the call. Get all your agents signed up. It is a great opportunity. The team at Grouplend is well prepared to work with you. They're very scalable. We're excited to work with them. I think you guys are going to have some great success here. So we'll have an email out to the broker owners today for you to sign up. Agents, go bug them and ask them to sign up for you. Okay. Any other last comments, gentlemen?
No, I think that's exactly it, Sean. You sign up, you can kick the tires, you can send some customers over. There's really nothing to lose, and we're confident that this is going to be a fantastic tool. One, to create some revenue, but much more importantly, continue to build that relationship. You got all these people that have been trusted you as trusted advisors. Let's keep you in touch with them and continue to offer more value over the lifetime.
And if you guys have any additional questions, my email is right there, Sean@Grouplend.ca. Feel free to flood my inbox today if anything comes up in mind, and I'll be happy to get back to you.
Well, gentlemen, on behalf of Eric, we'd like to thank you for today. We look forward to a successful partnership for everybody on the call and within the Verico network. Everybody else on the call today, go sign up, enjoy it, take advantage of it, make lots of money, make lots of happy customers, and have a great weekend. We'll talk to you all soon.
Thanks, everyone.